Hey there, it's Dave. Thanks for watching the video. I hope you're having a good day today. Today, I wanted to talk to you about a company called Redwire. They come up fairly regularly in the Discord server. We tend to talk a lot about space stocks on there. By the way, there's a link in the description down below if you're interested in joining. But it's a company that's been on and off my radar for the past year or so, and right now seems like a perfect time to take a first look at it for a few reasons. First of all, they've just had a great few days in the stock market. They're up 13+% over the last 5 days, which is always nice. But secondly, they have also recently announced they're acquiring a new company. So they're in the news again for those reasons. If you're not familiar with Redwire, they've acquired many companies since they went public via SPAC back in 2021. However, the stock has still been hurt very badly by the overall financial markets and the poor conditions that we find ourselves in for growth and tech companies. Before talking about Redwire, I just want to be extremely clear, as always. I currently have no position in the company. I am researching it myself for my own interest and considering making an investment, but this is very early stages, so I'm nowhere near ready putting my money into this company as of yet. I'm just researching it and sharing my research with you. So let's start off with a high-level overview of Redwire and what they do. So when I'm looking at a company, I first off like to take a high-level look at what they do, what the business is, and then once I have a bit of a better understanding of their products and services, then we can dive into the financials and see how the money situation is looking, how their valuation is looking, and if I think they'd be a good investment. Now, unlike Rocket Lab, Virgin Orbit, Relativity, or even Astra, Redwire seems to have no interest in actually launching to space themselves. Instead, they aim to take advantage of the growing competition and innovation in the launch space, which has been driving down the cost to orbit. Redwire CEO Peter Canito has said, "I believe there's a direct correlation between reduction in launch costs and demand for space infrastructure. It is this growing demand for space infrastructure that the company plans to capitalize on." Overall, Canito pitched his company as a firm that's in the middle of the space economy, which has grown to more than $420 billion. When space wins, Redwire wins, Canito has said. So what space infrastructure products and businesses are Redwire actually involved in if they won't be doing launch themselves? Well, the answer seems to be an extremely wide range of products. This has been driven in part by a large number of acquisitions they've completed after their SPAC offering, not unlike Rocket Lab themselves, as well as several in-house products developed by Redwire. Their areas of focus include space commercialization, digital engineering, on-orbit servicing, assembly and manufacturing, advanced sensors and components, and space domain awareness and resilience. Going over everything they're involved in would take many videos, so instead, let's just take a look at a few of their large flagship projects. In August of 2022, Redwire announced that it will be developing the only commercially owned and operated spaceflight qualified plant growth platform capable of growing plants from seed to maturity in space. Redwire Greenhouse, scheduled to launch to space no earlier than spring of 2023, will be the first ever commercially owned greenhouse installed on the International Space Station. Commercial agriculture technology company Dewey Scientific is expected to be Redwire's customer for the inaugural flight. Redwire Greenhouse will deliver valuable insights for crop scientists on Earth and significantly expand humanity's ability to grow full crops in space. The Redwire Greenhouse will leverage already flight-qualified Redwire plant growth technology, including Passive Orbital Nutrient Delivery System, or PONS for short, developed in partnership with Tupperware brands and currently operated by Redwire on the International Space Station. Besides PONS, Redwire has managed plant investigations in the NASA-owned Advanced Plant Habitat since back in 2018. By the way, please click like and subscribe down below to help us out with the YouTube algorithm and help grow the channel. I would really appreciate it. Next up is Pillbox. Redwire's pharmaceutical in-space laboratory, the Biocrystal Optimization Experiment, otherwise known as Pillbox, will provide commercial customers and researchers an innovative platform in microgravity that could improve the development of pharmaceuticals and other products. Eli Lilly and Company will be partnering with Redwire during the initial flight missions for Pillbox, focusing on the development of treatments for diabetes and cardiovascular disease. This is an exciting new capability that could unlock new drug development processes in space that could translate to improved pharmaceuticals and make a positive impact on human health, said John Vellinger, Redwire's Executive Vice President of In-Space Manufacturing and Operations. Pillbox is being developed in partnership with NASA through its In-Space Production Applications Flight Demonstrations program, which is focused on stimulating demand in low Earth orbit. On June 25, 2021, Redwire celebrated the successful installation of the first pair of International Space Station rollout solar arrays on the ISS. After several spacewalks and a successful installation, the arrays are performing as expected, augmenting the power for the ISS and enabling the critical work being done on board. iROSA uses large, flexible solar arrays with flexible composite booms that are rolled up for storage, launch, and delivery. When installed, each ROSA unit unrolls without the need for motors or other equipment, giving ROSA an advantage over rigid solar arrays and other traditional power generation technologies. ROSA technology also enabled NASA's Double Asteroid Redirection Test spacecraft, also known as DART, the first mission to test planetary defense technology by attempting to change the trajectory of an asteroid. This name might sound familiar to you, as the mission was just recently in the news and successfully impacted the target asteroid. Various modular versions of ROSA are also being produced for Maxar's power and propulsion element for NASA's Lunar Gateway program, the Ovzon 3 GEO spacecraft for Maxar's Legion-class satellites, and many other proprietary, civilian, and commercial applications. There are also plans for Redwire's solar to be used on the commercial space station orbital reef in the future. Alright, so now let's take a look at some of the numbers. Right away, the first thing that jumps out to me is that this is a very small company. I just took a quick look at their revenue, first of all, just to see kind of how much money they're making. And most recent quarter, we're looking at about $36.73 million. So definitely not large compared to what I'm used to. Annualize that out, you're looking at maybe 130 million, a little over there, something like that. So pretty small company, not massive amounts of revenue by any means. But that doesn't mean it's necessarily a bad investment as long as the valuation is still reasonable. So let's continue taking a look. By the way, rest in peace Hypercharts. I really missed that site. They had so many great charts you could access for free, and now I've just had to kind of use Excel to make a few charts based on the balance sheet information and cash flow information that's available. So, first of all, one difficult thing with this company is they haven't been public that long. So we don't have that much historical data to work with, and it can really make it difficult to kind of forecast future growth when you can't really see how fast they've been growing in the past. So that being said, we have about 5 quarters here to look at. Let's see how we're doing. We have total revenue numbers, 32 million, 41, then 32, then 36. So a little lumpy. I'm not seeing a definitive upward trend on this. Maybe a little bit. We did have a big jump back in Q4 of 2021. Haven't looked into it enough to know what was behind that, if it was just some big project coming to fruition or something like that. But other than that, just a little bit of an upward trend perhaps. Now, when it comes to the gross profit, we're looking at 5,757 basically. So that as well seems a little bit flat, at least from what I have access to right now. in terms of operating expenses, because we'd like to see those stay low. They actually have done a good job of keeping operating expenses low. Those have actually been dropping, which is pretty impressive, going from 35 to 22 down to 19. That one is nice to see. Now in net income, this one is a little concerning. The net income numbers are still in the negative, so we're not a profitable company right now. But we have negative 24, negative 13, negative 17, and then negative 77. That's obviously a big one. Now, I'm pretty confident that this negative 77 is probably coming from the recent acquisition they announced or something along those lines. It's probably a one-off event and not something that's representative of their normal numbers. So you don't have to expect this giant negative number every quarter, but it did happen and it did hit the books. So we are looking at losses of about 20 to 15 million per quarter right now. Continuing on, now we're looking at current assets and current liabilities, basically the balance sheet, kind of see how that's standing. We have total current assets is going from about 53 million, 55, then 43, then 45. So seems to be on a bit of a downward trend right now as they're still losing money, as you would expect. The current liabilities are going up. I guess they're taking out new debt, raising new financing, that sort of thing. We've gone from 37 up to 55. Total assets are actually going down here, so that's a little interesting. I don't know if they've been selling some assets or if that's just drawing down the balance sheet. Total liabilities have also gone up here. So we're looking at a little bit of an uncomfortable position on the balance sheet, in my opinion, at least, which is something I do look at. I think they may end up having to raise more capital in the near future. If we zoom in, actually, we can get a better idea of this with just total cash, or cash and cash equivalents, as it's called. So we can see they've gone from 27 million down to 20, then they were down to 5. They must have raised a bit of money, maybe through increasing debt, and then they're up to $10.87 million. So not a ton of money to be sitting on. Not a lot of cushion there. Pretty uncomfortable. So I would be very surprised if they don't have to issue new shares at some point in the future. They can perhaps keep just taking on more debt, but that's quite difficult and can become scary for different reasons. So if you are a shareholder of Redwire, you have to be comfortable facing some dilution as they raise funds. Now, it's not always the end of the world when a company raises capital through share dilution. Sometimes it can work out well if they deploy that capital effectively, grow the business quickly, and you get a great return. I know when I was with Tesla a few years back, they did raise capital. I did suffer some dilution, but then they still went on to do like a 6x plus, and I did extremely well as a shareholder. Not saying that's what's going to happen here. I'm just saying dilution is generally considered bad. There are some scenarios where it makes sense, and it's a good thing for the company to do, but you want to do it from a position of strength, not weakness, meaning you want the stock price to be at a high value when you issue new shares, which Redwire is not. The stock price is pretty close to all-time lows at this point, so they would be diluting from a very low value, kind of a position of weakness, which is something to be concerned about. There's only one analyst covering this company, not too surprising because it's an extremely small company. This analyst does have a price target of $11 per share, making it a moderate buy. Now, I don't know a lot about this analyst and how well they've done on their previous picks, but you can take that as one point in their favor, that at least the analyst seems to have it as a buy. Next, I wanted to check out alpha spread, see if we have any DCFs up on there I can take a look at, see what other data they have. There's not a lot, so the only DCF is the default alpha spread one. I don't know how great these are, but I just took a quick glance at it to see what they're thinking. And they're forecasting that Redwire will become profitable basically in year 3 out of the next 5 years. So that's probably about 2025-ish. And if you only have $10 million in the bank, you're not profitable for 3 more years. Yeah, you're definitely going to have to raise a lot more money through either issuing shares or raising capital. So something to keep in mind there. But we have obviously right now very bad operating margin as they're deploying capital, acquiring companies, trying to integrate all these companies and different technologies and grow the company. Then they have us going to a 6% operating margin back in year 3, 7.59, then 8%. Terminal is at 9%. So still not huge operating margins, really, in my opinion. They're using a discount rate of 8.25%. Seems pretty reasonable to me. Perhaps a little on the low side. This DCF did value Rocket Lab around $9 per share, which is obviously a significant premium to where they're trading right now. But I just don't have any idea where these numbers were derived from, how accurate they are, if they really are going to be becoming profitable in 2025. Where is that money coming from that's going to tide them over in the meantime? I have a lot of questions about this. So right now, it's definitely not something I'm going to invest in. I need to understand for myself how they will become profitable, whether it's a matter of just scaling and integrating these companies and realizing efficiencies as they have acquired many different companies over the past year. Perhaps I'll have to listen to a few of the earnings calls, listen to what the CFO and CEO have to say. I would have to understand how they will become profitable and how they will raise the cash necessary to get to the point where they are profitable before I'd be comfortable investing in this company myself. But I do plan to continue looking into it further. This is just a quick high-level look at the financials. So that's it for this first video on Redwire. Basically, to sum up, it's got some really cool technology. I love learning about all this space tech. It's pretty interesting. They do not intend to pursue launch, unlike a lot of other companies, so they won't have that vertical integration of being able to launch their own hardware and satellites like, say, a Rocket Lab would. But they're doing some pretty cool stuff that even Rocket Lab isn't doing. Rocket Lab's Solero part of the business is probably a competitor with Redwire's solar business, so a bit of a competition going on there. But they have used it in a lot of impressive projects, including the International Space Station, NASA's DART mission, plans for the orbital reef in the future, plans to use it on the moon, and all sorts of things. Definitely some really cool technology. I'm just not really sure about the finances at this point and what the company's path to profitability is, what they have to do to get there, and how they will get there, how they will bridge over during this period of losses, because right now the cash margin is looking a little low. So I'll continue to research this in the future. I'll listen to a few earnings calls, try to get a better sense of how they plan to get to profitability. I'm sure the management team does have a plan, and I'll let you know any updates I find in the future. Hope you have a great day today. Thanks for watching, guys, and I'll see you next time. Bye.